Yo, what's up, YouTube? It's Mr.BuyTheDip back here with another video. I got a special one for you guys today. I want to talk about the loss I took yesterday and explain why I got out of it and why it was the best move I've made. Okay, so if you look at this weekly chart, yesterday I decided, oh, this is probably correcting, right? It's a big drawdown from 1 p.m. to 1:30. Okay, we've seen Tempest AI run up 46% in a matter of days. This is the monthly chart or whatever. But if you look at this, it's went all the way up to 69. So I was looking to test 60, go back up to 65, get my profit, and get out, right? But this market had different plans, and we just kept breaking support about right here. I thought we were going to consolidate around 60, 61, go back up to about 64, right? That's not what happened. We just kept breaking, and I decided, okay, this is a loss. I'm going to sell. And look what happened this morning. I went back to check to see if I was right, to see if I should have sold at the right time, and yes, that was a good sell. And discipline is very important. I would have been losing more and more and more money right now, right? But I took the loss. I understood. I learned from it, right? I was too eager, didn't have the right set plan, and I got out of it. As simple as that. Now, importance of stop loss and day trading with Tempest AI example. I'm going to present this to you guys and talk to you why a stop loss is important. If you don't know what a stop loss is, that is okay, And why day trading, swing trading, whatever you do that requires buying and selling for a short period amount of time, stop loss is very important because you don't know if the stock is going to bounce back up. Nobody knows. It's just an analysis. It's just a very strategic way to plan and have a good hypothesis. You don't know if such and such stock is going to run up. I don't know if Apple is going to keep going up. I don't know if Tempest AI is going to keep going up. I don't know if Nvidia is going to keep going up after July when they unpause tariffs, or when Jensen and the China's tariffs has more news that comes out in a couple months, right? I don't know that type of stuff. So what you can do is position yourself to end up on a win, and that's exactly what I did previously, but I couldn't do it yesterday. Okay, now stop loss is a preset price at which you exit a trade or limit your losses. So if I have $1,000, I want to risk $100, and I'm looking to make $250. Okay, so you can use a 1-to-3 ratio. There's a lot of other metrics you could use to really figure out how much you want to risk, how much you want to win. But if you just set a decent amount and do some research on how to set good stop losses, you should be perfectly fine. Okay, now let's go back and look at why this is crucial in day trading. Okay, price movements are fast and often unpredictable. It is very unpredictable when you're day trading a stock like Tempest AI. I mean, this moves up and moves down in a matter of seconds and minutes, right? Just today, you can see how they're bouncing up and down. People get into these type of stocks, get out 10% up on the day, 11% up on the day. Sometimes they even hold it for a week. If they see bigger upside, end up 15 to 12% up in about a week. Okay, that is a annual return projected on the S&P 500. This is what you guys don't realize. So some people have made about 30% back on their money with Tempest AI, and you have to wait a couple years, sometimes 3 years, right, 4 years, whatever, to get that return on the S&P. Now, this is not always the case. The S&P can go all the way up to 40% up in 1 year, 30% up in 1 year, but the annual average return is 7 to 10%. So if somebody made 30% back on their money, that's 3 years worth of holding a investment in an ETF. This is why it's so powerful to day trade, swing trade, but also set a stop loss, because you can lose 30%, right? You can make 30% of your money, but you can lose 30%. You don't just want to hold. unless you really know metrics of a stock, unless you really know this is going to go back up to 40, this is going to go back up to $60. And I know it because I've looked at the history, I've looked at the volatility of the stock. As simple as that, right? Let's go back to why it's important. It protects your capital, removes emotion from trading. The number one thing, if you want to be a good swing trader, day trader, or even a long-term to mid-term investor, you're going to have a lot of emotions tied into why you're holding a certain stock. You're really long on NVIDIA. Oh my God, I love AI. I love the technology sector. But here's the thing. One news article, okay, one word Jerome Powell says, or two sentences president says, or a few phrases from China gets delivered, and boom, there goes your NVIDIA stock. Okay, down the gutter, down the hole. This is why stop losses are important. This is why having a reset is very important. Okay, if you're up 10, 12, 15%, you might want to take some profits and get out of that stock for a little bit. Okay, I was holding NVIDIA through a loss for this full month, right? And also February, also April. So a couple months, it was just, is NVIDIA going to bounce back up? Is NVIDIA going to bounce back up? And I've seen lows like 90s, right? I saw that in NVIDIA. It was like 95, 96. And when it gets to that point where support keeps going lower and lower, you start panicking, right? So when you're up on your money, why not sell, get a reset, and then if this gap up right here, this gap up is going to come down sooner or later. It's going to take a couple, a couple news articles, because tariffs is still on pause. That's why you have to be very, very careful with how much you're investing, with how much you're comfortable investing with. Okay, so basically, day trading volatile stocks like Tempest AI can trigger a lot of panic. Okay, you can be like, oh, just keep going up 5%, but you're at 5% already. Okay, that's your profit zone. You don't want to take profit. It goes up 5% again. We're at 10. You're still not taking profit, right? So it does not being greedy. Setting a stop loss beforehand avoids emotional decisions during live trades. Okay, so if you just set a stop loss, and it gets hit within the first 30, 20 minutes, you got to get out, right? It's That's what discipline is. Teaches discipline. Following your stop losses shows you're treating trading like a business, not a gamble. If you are getting in without any strategy, any planning, without monitoring the stock all day, looking for a certain price point, right? You are gambling. You are not using your strategy. You are not, back testing anything. You're not looking at price points. You're not looking at the 7-day moving average, 50-day moving average, 100-day moving average. You're not looking at these metrics. You don't have the MACD up. You don't have the RSI up. You don't have any of these indicators up. You are gambling, right? Keep that in mind. Now, let's talk about your capital, the money you're putting in. Okay, small losses are manageable. Large emotional traders can wipe out gains or accounts. Okay, so if I have $50,000 account and I'm trading $20,000 with no stop loss, right? That can tank within days. Okay, the market can steal your money within days, and there goes your profit. Okay, it takes months, sometimes weeks, years to build accounts up, and if you blow away an account, I feel bad for you, right? I mean, it's on you. Got to stay disciplined. So keep that in mind. Here's an example I have that you enter Tempest expecting breakout, but the stock turned quickly. Like exactly what happened to me yesterday. Okay, the stock just tanked. It broke support. I was expecting it to bounce off of 60, go back up to 63, 65. The way it broke support, it just looked too scary, right? It wasn't a dip. I wouldn't say it was a dip either. It was a big fall, right? And I took the chance, I took the risk of buying when it tries to retest, right? So let me show you guys what that means. So Tempest AI retested, right? They kind of retested. They went down yesterday, right? But they retested this level around the 30 minutes, like 1:30 to 2. They tested that level and they just tanked even more. So when they tanked even more, I was like, all right, I'm done. Right? I was like, I'm done. I'm getting out of here, and I sold at a loss. So you got to be very disciplined with that. You know, if I held it even more, I would have been losing even more money. Okay. Now, uh, you hit your stop loss. You protected your portfolio instead of hoping for a rebound. That is huge, right? I borrowed money from my NVIDIA investment to invest yesterday. So if this would have been held, I would have been down even more today. But not only am I messing up that $100, I'm messing up my re-entry in NVIDIA, because that is the $100 I borrowed from NVIDIA that I sold May 14th. All right. So keep these things in mind. These are, these are very, these are very important when you want to manage your money, manage your profits, but also manage your portfolio. You don't want to, you don't want to have $6,000 in one stock while your ETFs have 200, 100, $300. That makes no sense. You don't want to be trading $8,000, $9,000 when you have no secure backup plan. You don't have any type of money saved. You don't have any money, stored where you can lean on. So just keep these things in mind. These are, these are going to protect you from losses, because you're not going to win 10 out of 10 trades that